Well, hey everybody. Want to thank you for being patient with me. This is Chad Mack. I'm the founder of Dedicated and GKIC Merchants. The name of the main business is GKIC Merchants. Hi everybody. Thanks for being patient. This is Chad Mack. I am the fellow that sent you the postcard. It seems that this new Infusionsoft CRM we're working with, it got a little glitchy on us. We didn't get any notification that people were actually opting into the early bird list. So, my sincerest and most humble apologies for this report being a bit delayed. Now, as I mentioned, there have been some changes in the industry, so I thought that that was important to briefly touch on that, as I feel this could actually be beneficial to you if you're ever in a certain situation that some of my other clients have been in. So, just want to first start off by saying, really appreciate you being patient, and I think this is definitely going to be a very interesting recording for you to listen to and gain some insight and hopefully very valuable knowledge. So, without further ado, I think we should jump right into it. This credit card processing industry is a real cutthroat space, is what I've learned in the past. And it seems that, for your typical brick and mortar businesses that use the terminal machines, or, where you're physically showing your credit card and they're physically swiping it through a credit card reader, uh, those businesses essentially give the service away for rock bottom pricing. So in that industry, most industries that accept credit cards, this is, it's not really a customer service oriented uh, widget or product. It's more based on price, and you can get pretty low with your pricing. So I just want to make the comparison that with my industry, it's not about who has the cheapest price. Although I have to say, if you can get a very good price and excellent customer service, then there's nothing wrong with that. But my space, my industry is primarily uh, gives its most value to people, and it's not about having the cheapest price for fees and per item charges. So, before we get uh, to the start of this, I just wanted to say, preempt it with my sector of the credit card processing industry is a very niched out sector, and what we do for our customers is a matter of life and death for the heartbeat of their business. And you'll find out why here in a minute. So if you think that whoever's got the cheapest fees, that's who you're going to go with, I wouldn't necessarily base my business decision on the lowest fees. Um, this type of knowledge and experience and expertise that I have is really the best valued in the e-commerce space or the telemarketing space. And reason for that is, with most successful marketers, they have the ability to take an offer from zero to millions in a very short period of time. And doing that and having the capability of taking in, you know, all of that revenue via credit cards only, is very risky for the credit card processor to allow. So you will find yourself in a heaping, bit of trouble if things aren't done properly and the right protocol isn't followed in scaling up that business. So that that's where we're going to get started here. Excuse me. First, let me explain to you how the credit card processing space works, and why it's so important to have a really good relationship with the credit card processor. So basically, what happens is the credit card processor is a company that insures you, the merchant, to the credit card companies. So in this example, Visa, MasterCard, Discover, American Express will all want to do business with you, the merchant, but they're not going to do business directly with you. And you see, what happened was they got really clever and they said, "Hey, look, if this guy, makes bad on his goods or services that he's rendering, and we have to award the customer a chargeback or a credit back to their account because the merchant's at fault, not the consumer, then the merchant will most likely, if he's doing this to our customer, then he's done it to somebody else and probably somebody else's customer. So there's a high probability that they might not have the money in their bank account to cover these losses. So why don't we, make it to where there's a broker in between that ensures his merchants are going to pay the bills if they ever default by holding a large deposit at a bank that the credit card companies can go to at random, at will, without even notifying the processor, and take the money out that they just credited back to their consumers. So that's essentially what they did. They put a middleman in between the two, and that's how we find ourselves in today's current markets. When you accept credit cards, you're merely going through a broker who's insuring you with a very large deposit at a bank. It could be Deutsche Bank, it could be, you know, Bank of America, Chase, J.P. Morgan. So that's not the thing that really is to focus on. The thing to focus on is that you absolutely need the credit card processing account to accept credit card payments. And the chargeback situation, how Visa and MasterCard and the big companies get their money back by going and just removing it from the big deposit on that bank, that will come into play here later on in this recording. You'll understand why it's important for you as a merchant to have stellar customer service and to keep chargebacks at a very minimum, if not non-existent. So that's a little how the industry works, and I think it's important for everybody to know that because we're going to get into chargebacks here in a minute, and again, it'll all resonate. So one of the biggest things that I see happening to merchants is they gain success, and it doesn't always happen rapidly. It could happen, 12, 24 months after they initially fill out that first application before they really start seeing some big sales volume. But typically, what will happen is when the merchant's filling out the application and he's not being consulted or coached by an expert like myself, they try to they lower the amount of annual processing volume. Okay, so in other words, if their goal is to make $1 million a month, well, that's 83K, or excuse me, $1 million a year, an annual sales volume, then that's a monthly target of $83,000. So what will happen is what I've seen is, merchants will fill out on their application, well, I'm only gonna. My goal right now is 5K a month, and it could happen fast, could happen slow. So maybe I'll just put like 350K annually. Even if they did 5K a month consistently for 12 months, that's 60 grand. So that's well below the 300K, and this should be okay. And they move on. They submit it. It's approved. They do 5K for a while, and then all of a sudden the roof blows off and things start to pick up. Marketing's working, conversions are high, and sales are flowing. And before you know it, they're so hyped up and happy on the fact that they're making real money now that they forget about that measly merchant application that they filled out months back or years back, where they only submitted an approval for 300K, and now they're at 83K a month for 3 consecutive months, and they're about to blow out their wad. So what happens is the processor in that scenario, if you're lucky and you have a processor with some decent customer service, they'll actually reach out to you and try and get a hold of you. If they're unsuccessful, well, then that's when the trouble starts. And what will happen is the processor will continue to allow the charges to be the transactions to go through. But once you exceed the max allowment within their parameter, so once you start tapping into the 400 range and you've been approved for three, then that's when uh, a piece of software that they have pings one of the analysts, and boom, all of a sudden your file in your account pops up that you're processing too much volume. Well, depending on who is, and remember, these are all very hardworking American people that probably aren't seeing much more than $30,000 a year. So they have no intimate emotional connection to you or your business. They don't even know who you are. This happens to them on a daily basis. They get a list of merchants that need to be uh, contacted, or their accounts need to be frozen until further information is provided to them. And notice I said until further information is provided to them. That means you got to provide it to them. They're not asking you for it. Okay. Their position is, hey, I make 30 grand a year. This is my job. It says to do this. I do that. Boom, you get shut down, funds frozen. Okay. So it's not their fault. They have no emotional connection to you. You're just a piece of data in a day to day operational uh, ritual that they go through. So they get pinged, they see your account, they don't know what's going on, they reach out to you. If you don't reach back out to them and try and mitigate what's happening right away, then days turn into weeks, turn into months, and the next thing you know, you don't have any money. Things are, what happened? My deposits aren't going in, so forth. So essentially what happens is you've got to show them that you've been making money, and that you're keeping it in a bank account, that you're banking it responsibly. And then depending on how they want to move forward with the relationship, they may place a higher reserve on you or want to charge you larger transaction fees. Okay, the less work that they have to do over there, and the more that you're in communication with them, the better it makes them feel about insuring you. That's just the bottom line. So part of my secret sauce is talking to these people all the time, and my merchants are mostly good, very dear friends. And if I don't know them personally, then I know them from a friend of a friend, and they vouch for them. And I've done some background check, and these people do business with high integrity, morals, and values. Those are the people I go to war for, and will get deals done at a very high level with the credit card processor. So that's a very important thing. When something like that happens, you got to get in touch with that loss prevention analyst immediately. And chances are they're going to want to see some bank statements from that business bank account. Now, if you're not keeping it in the business bank account, we'll just show them wherever that money's going, and give them some bank statements, and they'll be cool with that. They'll see what's happening, work on it, tell them, hey, I'm so sorry. When I start scaling up again, I'll make sure I preempt it with a phone call, and that we work all these glitches out before I start running credit cards. So that's one of the major things that I see. Initially, you fill out a lower sales volume projection than what actually happens, and you never go back to correct it, never go back to renegotiate the deal. Obviously, if you're doing 300K annually, that's cake to them. If you do $3 million a month, then that's going to be a little bit different. Uh, Financial documents and P&Ls and stuff required to underwrite that deal, and maybe some different reserves and transaction fees additionally. So I hope that helps out. That's one of the big things. Um, Another big thing is, as I mentioned earlier about the chargebacks. Chargebacks are your enemy. Credit card company wants to know why in the hell these merchants aren't giving back the money. Why aren't they refunding? Why do I have to call? They have to call my call center and put my employees to work just to get a chargeback. The customer is going to get his money one way or the other, unless you really do have a good case and it is one of those wacko customers. We all have them. But in most cases, from the Cy Berry craze and all this forced continuity that was happening years back, a lot of people got scammed, and rightfully so. They deserve their money back, and that really put a noose around the industry and made it kind of change rapidly, and a lot of people fell off. But anyways, so you definitely want to make sure that your customers know when they get their billing statement. You want to make sure, you want to make it very clear to them what this $12.95 charge is, or what this $295 charge is, or whatever it is that you're charging them for the product. Okay, so basically you get 12 characters, and if some of my merchants put their telephone number, their customer service telephone number there with the initials of the product that was bought. Some of them just try to spell out the product to the best of their ability within the 12 characters. So that's really all in what you think is the better fit for your brand and your company. But you basically want to make sure that if the customer is buying howtogetrichquick.com, that and that's the name of the product and the website, that on the billing descriptor, howtogetrich.com is what they see. You don't want them calling up their credit card company and trying to figure out who the hell this, Radiant Exploratories LLC is, if you're selling a howtogetrich.com product. I mean, that's just as confusing as old shit. And they're probably not going to know what the heck that is when they see their credit card bill and want to know why in the hell they just got charged $350 for exploratory rating LLC or whatever it is I said. So that is a very important thing that you have to set up when you first initiate your application and go through that process. And I just recommend to everyone, you want a very, very good direct fit. If you're moving a lot of sales volume and your industry is prone to refunds and chargebacks and things of that nature, then um, you want to make sure that you put on there on that descriptor your customer service number. You want them to have direct access to customer service in the event of they want their money back or they want to get out of this monthly forced continuity program. So again, if you are moving a lot of volume and your industry is prone to refunds or chargebacks, mostly diet pills and supplements and things of that nature, monthly memberships, you want to put your customer service number on that descriptor so anyone who has an issue can call that customer service number and resolve it without having to call the credit card companies. So again, billing descriptor, huge, huge. I've seen a lot of people fall from that. Okay, here's another big one. We all get chargebacks. It is part of the space, it's part of the online territory. It happens. And that's why it's super important if you are going to be doing big volume online or through call centers, you need a merchant account that has a processor working to that understands the nature of your industry. You definitely don't want to try and board your account with a business or a processor, excuse me, that specializes in grocery stores, gas stations, and restaurants. They are not going to want this type of risky business. They may say that they want it, but when those chargebacks start happening, they're going to want to cut you off and shut you down immediately. Remember, when that happens, the credit card companies get a little pissed with them, and that jeopardizes their ability to do business consistently and smoothly with them. At any time, the credit card companies can say, hey, you know what, processor, we're not doing business with you anymore. See you later. And that's it. You're done. You're out of that industry. So, um, chargebacks are a real thing. So here's what happens. This just happened to me with one of my large merchants. And, you know, affiliate marketing is huge online. It's very, very awesome when done properly. When done improperly, can be a huge headache. And he got a little taste of that. So his affiliate manager is now fired. This guy allowed an affiliate in, set up 8 accounts, ran, I don't know, probably somewhere in the neighborhood of 150 chargebacks between Visa, MasterCard, and Discover. And this guy, he said, hey, man, I just fired this guy. Like, I'm really pissed off about this. I want to make it right, but I'm letting you know there's about to be a wave of them coming. You know, I'm just letting you know. And so what we did was we got some reporting from his bookkeeper, and for 2 months back to back, we submitted reporting from his angle, what he was seeing in terms of chargebacks and refunding those chargebacks, and then what the processor was seeing internally on their end. They were able to compare notes and reconcile differences, of which there weren't any. So you got to think, as I mentioned earlier in the call, I said, hey, you're dealing with an employee there that doesn't know you personally. You're a piece of data and a software application that has alerted this analyst you have exceeded your chargebacks or you are approaching 50, 60 chargebacks through Visa. So this person doesn't know who he is. His job is to mitigate losses, okay? It's to prevent them, loss prevention. So when he sees your account, he's going to flip out. He's going to be like, holy shit, this guy's got a bunch of chargebacks. Let's go ahead and shut him down for now. We'll freeze this account. Why is he getting all these chargebacks? Why isn't he refunding the money? Well, because in most cases, you don't even know what's going on. And you would love to refund them the money, but you don't have a clue it's happening because no one has reached out to you. Bad affiliate traffic. So, in this scenario, working with the loss prevention analyst before they even see the chargebacks coming through, letting them know, hey, it's about to happen in a few days, they know when you get pinged and they see you, oh, it's no big deal. I spoke to that guy a couple days ago. He called me right before lunch. Really awesome guy to talk to. Really positive energy. He really had made my day good, you know? So I'm not concerned about this. I've got 900 other merchants to work through by the end of the workday. So they are not going to really be sweating you if you have given them all of the justification as to why it's happening and letting them know that you're on top of it. That's the whole reason they get pinged and call you and freeze your account in the first place, because they don't know. So if you proactively get in touch with them and let them know, hey, winning, you don't have a frozen merchant account or funds held or crazy stuff where you're losing it, you know? So it's huge. Take a note of that. All right. So the way that I work with my clients and alleviating these headaches is I let them know when they get signed up with me. Hey guys, look, here's the deal. In real time, when you find out about these things happening, you call me, you let me know. I will get this taken care of. But you have got to be responsible and call me. That's the only way I can make this work, is if you do your job. So my guys all do great, fantastic work. They're excellent guys to work with. When they smell the shit getting thick, they buzz me up and we have no problems working together. It's a really awesome experience and they greatly enjoy my ability to negotiate on their behalf. They never call the processor. I do all of that for them. Okay. Um, so I think another important thing to go over here is going to be scaling up, as I mentioned earlier. So I just want to give you protocol for my company and the capacity that we work with our merchants. What we do when we're anticipating something like a product launch, or something like a bunch of affiliates dropping mail, or one affiliate dropping mail that's going to increase the sales volume significantly. So what will happen is, say you have a launch coming up in next month, and you've been processing 20K a month. You've been approved for 300K annually. Okay, so you've been processing $60,000 less than what you were approved for. But in this launch with this certain affiliate, this guy's going to kill it, man. This guy is going to bring in 200K overnight. Okay, so what we do is, first of all, we need to start the negotiation in as much advance time as possible. Now, I'm not saying a year out from the damn email broadcast, start negotiating the deal, but I am saying give me a month minimum, or give yourself a month minimum. If you know that it's going to happen in a month, start calling the processor, start talking to loss prevention, and feeling things out to see where the deal is going to go, to make sure that you get a fair deal, because sometimes they want to stick you a little bit and you can always go shop around. So that's the leverage that you have when you're negotiating your deal, and that's why you need to do it in minimum 30 days out is what I recommend. So what you do is you go to them and say, hey, look, here's this affiliate, this is website, and this is loss prevention. And you say, look guys, this guy, we're anticipating pulling in $200,000 in the week's time, or in 24 hours, or whatever it is, right? And just see what they say. So, in most cases, they're going to want to hit you with a little bit of reserve. I mean, let's be honest. You've been approved for 300K. You have bank statements that can show a $300,000, merchant account. You don't have bank statements that show a $200,000 a month merchant account. So you essentially are saying, asking them to insure the shit out of you in the next week. Okay, so what they may do, some of the ways that you can alleviate them saying no and allowing you to take in the additional volume, is by placing a reserve on the account for the launch. And what that means is, if you don't have a reserve already, God bless you, you're doing great. But if you do, you already know. For the folks that don't, reserve is, in most cases, there's a 10% 6-month rolling reserve. That's pretty much the industry standard for the e-commerce space. Anyone who's wanting to do some real sales volume and have that money deposited into their bank account every night at midnight, they're going to have a reserve. Okay, so the reserve, a good reserve's 5%. So if you're at a 10% reserve in this situation, looking to do 200 in the next, month, and taking that in over the course of a week, they're probably going to want to put a 5 to 10% reserve additional to what you already have. And that's fine, but you just make sure that come month 6 or whatever the terms are, you give them a buzz and let them know that or in month 5, if the terms are 6 months, which are the industry standard, maybe you can negotiate the terms for 2 months or 3 months on the additional 5 to 10% that they want to put on you. And that's just there for them in case there's some chargebacks. They're not comfortable with you running, that type of sales volume. So they just want a little additional insurance, and that is normal. So, whatever the reserve percentage additional is, I would try and beat them up. I'd let them take the money, but I'd beat them up on the terms of that reserve. I'd try and get it reduced a little bit, since it's just for that one launch. And if you have a reasonable analyst that knows you, and you've spoken to them many times in the past, and they feel comfortable that you're not blowing smoke up their tailpipe, and you're doing business with good integrity and values, then they may give you those terms. They may go for 2 3 months instead of 6. So that's definitely worth entertaining, because remember, you can always go to the competition to negotiate a better deal. So uh, that would be one way to go about doing this. Another way that you would want to request an addition in sales volume is if your marketing's working and things are really growing fast. So let's say you want to go from 300K to 700K, and you just took in 320K the last month. So in this scenario, you would want to submit, if it's been longer than 3 months since you submitted any bank statements. Typically, they want to see 3 months, or if, say, you submitted bank statements last month, they just want the current month as you're scaling up your volume. But in this scenario, you would have 3 months bank statements that you would submit to a loss prevention analyst. And what they're looking to do is see where all that money you've been taking in is going. They want to see it in your business bank account. They want to see it in your personal bank account. They just want to see it. It lets them know that, hey, this guy's not going to Vegas every weekend and partying like a rap star at the pool party, popping bottles of champagne. If he's going to be scaling up from 3 to 700,000 dollars, we want to make sure he's responsible, and he's a mature entrepreneur and business owner that's going to bank his business properly and not cause us any losses. So long as you're keeping money in your bank, which I highly recommend if you haven't figured that out by now, you should be approved for the additional sales volume. And let's say in another 2 months you go from 700, things are blowing up now. You're doing 2 million. We'll just submit the most current 2 months, which would be the 2 months here in this scenario, and show them, hey, the money's staying in here. I'm keeping the money. So the more money that you have, the more money they'll allow you to process in credit card sales volume. So that's a nice little trick too. If you've never heard that, or never understood it, I think that will definitely help you out. So I think that's pretty much it for now, guys. I did want to mention about the industry. The new development. It's not totally confirmed yet, but I think I'm going to be releasing it via email here in the next couple weeks. But in the past, what's happened is, let's face it, there's only a few processors out there that really work well for us e-commerce guys, and we all do business with them. In the past, there's been some issues with management of those accounts. So in other words, if you went to, let's say, PowerPay in this example, you went to their website and you filled out an application and you started processing, and then you weren't taught, or you weren't consulted and privy to any of this information that I just discussed. If you were in a position where you had someone like me that was more customer service oriented, and you enjoy the experience better because we were much more proactive with our communication and our alignment and strategies and accomplishing what your objectives are, then there's been some resistance and trying to manage any new business. But I believe that moving in the future here, they actually are starting to lighten up a little bit for us agent groups, and they're working a little bit better with this because they know that our customer service, our understanding of your industry, of the merchants industry, is very key and detrimental to the success of how we do business. So there's definitely some good vibrations going in that department, and I think that it's only going to help us collectively win in the end. So that's kind of the new thing that I'm starting to feel like maybe there's a paradigm shift happening. So if you guys need any more insight or need to talk to me about something specific that wasn't covered on the call, I'm totally available. Just hit me up at support@gkicmerchants.com. And by all means, fill out that application and let me do all of your management and representation with the credit card processor. We're really really great at what we do, and our merchants and clients speak volumes of the ease that we make this whole process for them. And it's really awesome. We have our parties down in New Orleans for Mardi Gras that we do every year, and that's always a good time to reconnect with clients and just mastermind with all our various e-commerce merchants about some of the things that they're doing that's making their businesses just awesome. So yeah, sign up with us, get a merchant account, give me a call, shoot me an email. Let's get started today. So again, Chad Mack here, wishing all you guys and gals a great and prosperous 2013 and remainder of our lives. So get out there and have an awesome day. Take care. It was great going over this stuff. I hope to reach out and talk to all of you here very soon in the near future. So hit us up, support@gkicmerchants.com. Take care now. Ciao.